Today I'm diving into a tech giant that I'm super bullish on, Alphabet, the company behind Google. For those who live and breathe the internet, Google practically runs the show. But beyond search, Alphabet has its fingers in a ton of pies. YouTube, Android, cloud computer, the list goes on. The reason I'm so excited about Alphabet, in this video we are going to break down the rock solid fundamentals, a valuation that might surprise you, and why I think this company is a powerhouse for the future. So buckle up and get ready to learn why Alphabet might be your next long-term investment winner. So first, let's talk about the company. Google is a big company, rock solid fundamentals, rock solid balance sheet, a wide moat. You just have to look into their business, their margin. A lot of companies have tried to gain market share, but until now they couldn't. So this is a really big company, but they are having some difficulties getting into AI and investors are not loving it. So that's why the stock is underperformed the other Mag 7, for example. That's why Microsoft, Meta, for example, are doing great while Google is not doing so great. But when I look into it, forward P of 17, this is really low. When you compare, for example, to the S&P 500 that is trading at a forward P around 20, Google is a better company than the overall or the mean of the S&P 500. It's growing faster, has better margins, wider moat, and still they are trading at a lower valuation when you compare to the forward P, for example. Insane margin. When you look evaluating the fundamentals, we can look into our management checklist. They have been growing around 18% in the last 5 years per year. I mean, compound annual growth rate of 18%, which is awesome. Gross margins of 56% while having net margins of 24%. This is a high margin business, real great company. They have almost no debt. They have a pretty strong balance sheet. When you look to the cash they have in hand, they have almost $11 billion, while their long-term debt is only $11 billion. So they are net positive cash of around 100 billion. You don't see any other company with a balance sheet like Google, so great company. Return on investment of around 24%. 5-year average is around 27%, which is awesome. You don't see many companies with these returns. For me, a wide moat on search on YouTube, it's their best asset. They are getting to cloud. It's the third biggest cloud provider, and they are still growing, turning profitable, but there are still plenty to improve in that business. But this is a really great company. They're having free cash flow positive. They are returning capital to the shareholders, doing a lot of buybacks. But one of the best companies. Look into our valuation of fundamentals. This is a really great company. So, but year to date they are down while the market are doing better. This might be a really great opportunity. So we have to look into valuation, for example. In my opinion, the only thing I don't like is Google is paying a lot in stock-based compensation, and I have to take that into account into my valuation. So for me, the discount rate I will use for my base case will be 11.3%. I have a new formula to calculate or to assume a discount rate, so for me it will be that. What should be the P we should assume? I'm assuming a 19. I do really believe they deserve a premium when you compare to the S&P 500 average. So for my base case, I'm assuming a 19 P. Growth rate, they are expect to grow around 10%, 11. So I will be conservative on my analysis, expecting them to grow around 10% in the next 5 years. And for the last 5 years of the 10 year, I'm expect them to grow at 6%. I think I'm being really conservative. So for my margin, I'm expecting them to have a free cash flow margin of 23%. They could do far better. They have done in the last year 24, so I'm assuming a lower margin than what they have done in the last year. So being conservative as well. And then I can have a bull case and a bear case around that. But I do really believe I'm being conservative. And being conservative, we came with a fair value of around $166. So Google is trading right now at $135. So this is a discount of around 23-25% of my fair value. This is a fair value that has some margin of safety, so this is the price I'm willing to pay. So that's why Google is one of my best positions. Full disclosure, I do own Google. It's one of my biggest positions, and it's a company I'm really interested in continue to increase my positions, and that's because of it. You don't often see a company with the quality of Google trading at a discount when compared to the market, and I do believe this is a really great opportunity. But Google is trading at this discount because investors are afraid of Google, are afraid that Microsoft will broke the moat that Google has, that they will gain market share with OpenAI and Bing and artificial intelligence. But Google could be doing better, but everyone expects a lot from Google, especially in AI. But I do really like their product. They really have done really bad with Gemini and their image generation. It was really bad, but Google will have a really great product. I do really believe in Google, and a lot of companies in the past have tried to break the moat that Google has, and they couldn't do that because Google has a wide moat. You didn't see, I'm doing a search, you say you are Googling it. This is a sign of a moat. These margins that they have, it's a sign that they have a great moat. They continue to grow and they are gaining market share in a lot of other business. So Google is a diversified company, or Alphabet, but I'm really bullish on this company, especially at this valuation. So I do believe investors are really afraid, and this might be the opportunity where you have been looking for. So everyone says you have to buy it when no one's like it, but when a company is having problems, everyone is afraid to buy. So just full disclosure, I've been buying this company. I do really like Google as a company, and if you are afraid of Google, and if you are afraid that Microsoft will break the Google's moat on search, for example, with ChatGPT or AI, you shouldn't be investing in this company because this is a real problem for Google. But I do not believe, I do really believe investors are overreacting, and with this overreaction, this might be a really great opportunity. That's why I really like Google. This is a great company, one of the best out there, a wide moat, really great business model, high margins, everything I really love to see in a company, and I do really believe they will continue to grow. They will continue to make a lot of money, and they have an incredible balance sheet. So when I looked at this company risk-reward situation, I do believe that are pending in the reward side. So I do believe it can be a really great investment because it looks undervalued for a company as good as Google. So this is my opinion, guys. I hope you find this video interesting. So please like and subscribe. See you next time.